Coming up on Your Money and Your Life, 3 Aussie tech stocks positioned for a rebound. Jumbe Lu reveals her top picks. How Aussies can save thousands on their grocery bill with one simple switch. The lending options opening new doors for home buyers and investors. Plus, in Kochie's Budget Challenge, surprises in store for Queenslander Clement. G'day and welcome to Your Money and Your Life, my personal finance show that focuses on saving, spending, investing and enjoying your money. My mission is to help everyday Aussies keep more money for themselves during these tough financial times. Today we're kicking off with Kochie's Budget Challenge. Every week, with the help of the team at Compare the Market, we visit real families and dig into their bills to see if they could be on a better deal. Last week, we met Clement, who lives just north of Brisbane. He's already saved thousands on his home loan, so can we find him more ways to save lurking beneath the surface of his bills? Challenge accepted. Well, Clement, thanks again for having us here in your home at beautiful Deception Bay. Let's have a look at your electricity. You bought an EV. How's it going?
The initial investment is high, but previously on a petrol card, I used to spend something like $200 a month on fuel. I'm now spending like $17 a month on electricity.
And that is the kicker, isn't it? Because Compare the Market ran some numbers last year to find out potential savings and found a petrol car would cost about $2,247 to fill up over the year if you're travelling about 15,000 kilometres a year. Equivalent EV would cost around $778 to charge on an average home energy plan. So that's a difference of more than $1,400. But you've got to be on the right energy plan, don't you? You look as though you've had a look at that and been on a specific EV energy plan with your retailer?
Correct. I'm on an EV Night Saver plan. So I run all my appliances, such as my washing machine, my dishwasher, charge my car anytime between 12 midnight and at 6 o'clock in the morning. It all runs on a timer. Get the job done at a fraction of a price.
I think you've been having a lend of us. I think you're a bit of a savings guru. A simple tip, pop a reminder in your calendar once a year to go back and compare plans because they do change on a regular basis, even though you're on a great deal now. Now let's move on to car insurance because this can be a sting that catches a lot of EV drivers unawares because whereas the car is cheaper to fill up, some of the shocks in terms of insurance are pretty hefty. So you're currently paying around $2,500 for comprehensive car insurance. Not on a bad option at the moment, but when that renewal comes round, if you don't want to be slugged with the loyalty tax, just go back and compare and see what's available and get the best deal.
Yeah.
Finally, onto your health insurance. I know this is something you're really keen to find out more on. You've got extras. How are you using them?
Probably once a year, I go to Specsavers to get my glasses, and that's about it. And I'm hoping, Kochie, that you'll try and help me find, wave your magic wand and come up with a solution for me.
Well, the extras is where a lot of people get caught out. If you're happy to ditch a few treatments you're currently not claiming on for things like non-PBS medications, lifestyle, dietetics, you could shave around $158 off of your premium.
Oh,
so have a look at it.
That's a significant saving. Thank you for that.
In summary, for a person who reckons they don't compare often, you compare a lot, which is fantastic. You've saved around that $5,000 over 2 years on your mortgage, so that's a great start. Fiddling around with private health cover could shave a little more off. All up, Clement, I've got to say your bills are in pretty good shape.
That's a great news, Kochie, and thank you so much. And that gives me that confidence that I'm on the right track.
Yeah, you certainly are. And the team at Compare the Market would love to give you $1,000 to say thank you for having us in your home today.
That's amazing. Thank you so much. Greatly appreciated.
Good on you, Clement.
I was quite surprised when Kochie said I was on the right track, and I didn't realize I was a natural bargain hunter. Amazed to know that I was given $1,000. The first thing I'm going to be doing is getting a bag of prawns and going to crack open a bottle of bubbles. The savings are going straight into reducing my home mortgage.
Still to come, the top Aussie technology stocks with long-term potential. Welcome back to Your Money and Your Life. Well, Australia's tech sector has had a rough run lately. According to data from Market Index, the ASX 200 Technology Index has fallen nearly 40% over the past year. No magnificent sevens there, let me tell you. Investors are grappling with higher interest rates, slower growth, and a rapid rise of artificial intelligence. But history shows periods of weakness can often create opportunities for long-term investors. So which Australian tech stocks could rebound strongly over the long term? Junbei Liu is the founder and lead portfolio manager at NCAP. She joins me now. Junbei, Aussie tech has taken a brutal hit. Is it over?
Look, I think it's getting very, very close. Now, the reason our tech has been taking such a big hit compared to the US tech seems to be hitting higher and higher every single day is because most of our technology companies are software companies. So the software technology company in the old days are the best one you want to get because they have very little capex to spend and their margins are huge, and then they got a huge addressable market, so they can be replicated in different markets. So these are the good business to buy in the old days. But the challenge is that in the last 6 months, the AI has now taken the world by storm across every single sector pretty much. So investors become very worried that what does that mean for those software companies? How do they sit with the agentic AI world that is taking over everything seems to be?
That's sort of a revolution for them, isn't it? So are there 3 Australian tech stocks that have been hammered that you think have a good future and could be good rebound prospects?
Absolutely. I think there's there's quite more than 3, but these 3 are the top ones we think. Yeah, number 1, Life360. Now, Life360 is tracking software that is taking the world by storm.
My daughters use it for their families and track all their kids.
I track my cats and dogs, and my daughter, she's 15. She tracks all her friends and everyone else. And then in the US, believe it or not, Life360 is actually in the top 3 most used software app in a social media app in the US, and that compares to your Facebook, your Uber, like all of these things. It's quite incredible. So it's very heavily used, and it's still very heavily penetrated. So there's lots of growth to come through. Companies growing in a big way, and it's not about to be disrupted by agentic AI because you need the software. You need the software to really track, and then they also have a device as well that you can purchase, a little bit like AirTag. So the companies are going to grow significantly in the next 5 years, and right now it's just at the tipping point of monetizing all these active users, because as you know, a lot of those growth companies, they have active user but they can't make money from it. They are actually now converting them, so they are moving from almost making $0 in advertising to almost 200 million, 150 to 200 million in 12 months. It's just incredible. And then they're launching new products in the vertical like pets and others.
Technology One has always been the market darling. Is it still?
It's still market darling, and it's the best of the SaaS software bunch. The company share price still fallen 30%. People taking all these premium out of the market, but the company has demonstrated they're not being impacted by the AI. They're benefiting from it. Now, every software package they're selling has AI tools in them, and their client feedback has been incredibly strong, and they are actually benefiting from it. The company is not just Australia, expanded into UK, and the growth there is phenomenal. And its customers are actually governments and councils. So these big contracts last for decades.
Yeah, they're very sticky,
it's
aren't
very,
they?
very sticky. And it took them decades to really win those contracts. So, huge amount of growth ahead and for very reasonable valuation.
And number 3 is Pro Medicus, which was a market darling. but has pulled back a lot, hasn't it?
Yeah, this one has lost almost 60% of the market value as people worry about, oh, what does the AI mean? This company is built into the healthcare system, and AI, if anything, actually benefiting this company because its software is being used by a lot of AI businesses to train the AI responses, whether it's for radiology and others. So, you know, this business has, again, taken the US by a big storm. It's actually now in many of the top hospitals in the US, and the way it makes money is clip a ticket. So every time when there's an image that's being scanned, CT scan and others, and being viewed by someone, they clip a ticket. So, you know, so the volume growth, it has been significant. And then also they're winning more and more hospital contracts. In fact, in the last 6 months, they won some of the largest contracts. And these contracts are very long dated as well for this business. So, you know, great business, great to be buying now.
Gee, Australian tech stocks are not dead at all,
Not at all.
Thank you for pointing us in the right direction.
Thank you for having me.
Here's a myth about super that doesn't get talked about enough. I'm not at risk of cyber scams when it comes to my super. Well, when it comes to staying safe online, most people think about their bank accounts, but your super deserves the same attention. Super funds are increasingly targeted by cyber criminals because they hold large balances and personal data. The good news is strong protections are built in. Funds use multiple layers of security from multi-factor authentication to systems that monitor for suspicious activity. So when you log in, you'll often get a one-time code sent to your phone or email, adding an extra barrier beyond just your password. But keeping your super secure is a shared responsibility. Scammers are becoming more sophisticated, using fake emails, texts, and even impersonating financial advisors to try to access your super. Here are some more tips to remember. Never share your password. Be cautious with unexpected messages or links. Always double check who you're dealing with. And if you're ever concerned any of your accounts may have been compromised, whilst you are contacting your bank, don't hesitate to contact your super fund. A few simple steps can go a long way. After the break, home buying options Aussie don't know exist. We sit down with Drew Happ from Wealth. Welcome back to Your Money and Your Life. Now, when you're on the hunt for a home loan, most of us focus on getting the lowest interest rate and keeping an eye on where rates are heading. Sure, that's important. But if that's all you're looking at, you could be missing out on other lending options and loan features that may be a better fit for your individual circumstances. There are solutions many Aussies don't even know exist. Find out more. We're joined by Drew Happ, co-founder of online impact lender Wealth. Drew, good to see you.
Kochie, impressive, mate.
Focus so much on the interest rate. Why do you think? And is that a mistake?
I mean, obviously the rate's important, but there's many other functions and parameters of a loan which is equally, you know, as or more important to a loan. And probably say one thing that consumers look at is there's two rates that are listed. One's the lead rate, the hook rate, and then there's a comparison rate up in the corner usually. And what it effectively means, it's a total cost or total rate. So you might have a 5% loan as a lead or hook rate, 1% extra fees and costs on top.
So what other lending opportunities are out there for people that they should be aware of?
I mean, we just had one, you know, diminish in SMSF residential, but commercial is one for self-managed funds. There's construction lending. You could be doing renovations to your property. Again, construction lending, top-up loans. Unlocking more equity. You know, there's a whole plethora of products out there for consumers, but it's about understanding what's there for you, and speaking to your broker is obviously usually key to that.
Yep. And self-employed people often say, look, I may not even bother because my income's not consistent. The big banks don't understand what my business is all about. Is there any solution for them?
Oh, it's one of the biggest myths. For small to medium enterprises or, you know, SMEs, self-employed, there are a lot of opportunities for them, and the market is quite broad, but it's more specific. So your general, you know, vanilla loans you see advertised, they're, you know, a round hole, round peg sort of opportunity. Mum and dad, PAYG loans. There are many opportunities out there with other lenders and other products to suit.
Drew, many people don't understand that there can be 0% mortgage insurance on some loans.
That's true. I mean, mortgage insurance is really costly. In most loans, for over 80% LVR, so loan to value ratio, 20% deposit. If you have less than that, you're usually paying thousands or tens of thousands of dollars on your loan. We've opened that up to 85% loan to value ratio for every PAYG salary earner in Australia, regardless of industry, up to 90% for essential workers, okay, including teachers, and up to 95% for professionals in the industry, which is typically your doctors and lawyers, accountants, and IT workers.
Okay, so let's put that into practice. Jan's a school teacher, short on a deposit. What are the options for her?
Yeah, usually the teacher Jan is not happy at all. But Jan today is grinning ear to ear. We have up to 90% now LVR for teachers. So only 10% required to buy your home.
Right, and no mortgage insurance?
No LMI, no mortgage insurance, which typically would be saving Jan tens of thousands of dollars that can now go towards a deposit or paying down a mortgage.
So the bottom line is there are plenty of options tailored for you, no matter whether you're a small business owner or a professional or whatever. You've just got to go and hunt them out.
There absolutely are, and that's, I guess, the benefit of your new incumbents in market. We need to look at other areas which aren't being serviced or catered to en masse by the big banks.
Yeah, and mortgage brokers are often the ones to go to find out these specialty loans.
Yeah, correct.
Drew, thanks for joining us. Some great options there that I reckon most people have no idea about. Good to see you.
Thanks, Kochie.
Coming up next, the supermarket swap that could save you thousands of dollars each year. Now to a belief many Aussies have accepted during the cost of living crunch. Groceries are expensive no matter what. You just have to accept it. Well, new research suggests that's not entirely true.
Sometimes it's just a matter of choosing a cheaper alternative to the big name brands.
Compare the Market research compared 20 common grocery and household items across 2 major supermarkets in May this year. Here are some of the biggest price gaps. Switching instant coffee could save shoppers an instant $8.50. 1 litre of home brand body wash, more than $8 cheaper. 1 litre of mouthwash, $9 less. And even your basics like toilet paper and cleaning sprays were much less.
While savings can be found in every aisle, we saw some of the biggest differences in toiletries and cleaning products.
Sarah Orr from Compare the Market says shoppers who make the switch across a regular weekly shop could save more than $3,400 a year.
One of the best ways to spot value is to look at not just the sticker price, but the unit price. This tells you if you're actually getting good value.
Here are some other ways to save more at the grocery store. Plan before you shop. Doing your homework first helps avoid impulse buying. Don't let brand loyalty cost you. Make the most of your loyalty programs by scanning them every time you shop. And check for hidden perks you're already entitled to.
Small savings really do add up.
Before you turn your nose up at home brands, remember, some are made in the very same factories as the premium products sitting right next to them. In this week's Word on the Street, we asked, should you lend money to a family member or friend, and how it went?
I have lent money to people in the past.
I've lent money to family.
Family, mostly. Never friends.
It's normally when it comes to like emergencies that's been lent out.
At a small scale, yes, and I mean around $1,000, and it didn't work out very well. Would I do it again? yeah, for the right person.
It has to be an amount that you feel comfortable lending, understanding that maybe that money may never return.
I think that it can be really great to help somebody if they need it, but it can be awkward and it can feel like it's putting you into a bit of a hard spot sometimes.
They've normally been pretty good in terms of like repaying it back.
A lot of people are worried at the moment with when the next paycheck is coming or just getting by. So if you're okay, you know, it's good to also make sure other people are okay too.
It's a hard one because you never ask for the money back. I don't love it.
Well, that's all from your Money and Your Life for this season. If you want to get up to speed with the latest financial and investment news and more expert advice, just head to ymyl.com.au 24/7, 365 days a year. And while you're there, sign up to my free weekly newsletter. It arrives in your inbox every Friday. Thanks for watching.